Hello, all my dear students. Today we are going to talk on the subject Auditing and Taxation, chapter number 1, that is Introduction to Principles of Auditing and Audit Process. Let us understand the topic of introduction under this chapter. Let us understand with the introduction of auditing first. So, what is auditing? Auditing is nothing but it's a methodical examination or review of a condition or situation. Condition or situation denotes either there can be the review of books of accounts, there can be review of systems, there can be review of processes, anything. So auditing covers every part where the examination or review is going to be conducted. Some examples of auditing like financial statement audit, which is we probably known. Then there is energy and efficiency audit, as well as environmental audit and many more. In this way, we can conduct the audit of a situation or a condition like environment, like energy efficiency, or like financial statements. Now where this audit term has been evolved, this audit term is derived from Latin word audire, which means to hear. What is the reference of this? Auditor used to hear accounts for detection and reduction of errors and frauds, and the process of examination of records has come to be known as auditing. As we all know, auditor has to perform the duty to hear the accounts. Here the accounts means he has to check every detail information regarding the accounts maintained by the organization, as well as he has a right to call for any information from the company to check whether any errors or frauds are there, and to check the process and recording of company's financial statements. In this way, the term audit has evolved. Now let us understand the origin of auditing. The origin of audit may be traced to ancient civilization. Historians of accounting have noted first, that is biblical references to common auditing practices. What they were doing such as dual custody of assets and segregation of duties. So in short, they were doing some auditing practices of getting custody of assets and segregation of duties among the persons. Then there is evidence that government accounting system in China during 1122 to 256 BC has included the reference of audits of financial departments. Thereafter, in early 5th and 4th centuries, both the Romans and Greeks devised careful systems of checks and counter checks to ensure the accuracy of their reports. So in 5th and 4th century, there has been the development of a careful system of checking and counter checking to ensure the accuracy. And in India, we can say that the evidence that in India also there existed an organized system of accounting and auditing during the pre-Vedic and Vedic eras. If you know, in Kautilya's Arthashastra also there has been the description of methods of accounting and its verification. It contains probably 40 kinds of frauds and embezzlements, and also the punishments for various offenses. And in those time, like in Kautilya's time, auditing was conducted for revenue collection and its disbursement, And also there was the method of maintaining records of assets of the state, and the government records of various transactions and assets were maintained by their officials of the kings, because there was there was a king's regions, and were approved only after they were heard by a person called auditor in the presence of their kings in the public. So we can say that the origin of auditing has a reference from biblical, thereafter China, Roman and Greek, and later on it came into India. Now let us understand the history of auditing, which we have already known. Like, audit is derived from Latin word audire, which means to hear, and auditor required to hear accounts for detection and reduction of errors and frauds. The process of examination of records has come to be known as auditing. So the correction and examination of these records, like accounts, to detect any kind of errors or fraud, that system was known as auditing. Now let us understand the next stage of audit process, that is medieval period. What happened during this medieval period? In the English speaking countries mostly, audit of towns and cities were held publicly, and auditor used to detect frauds and errors from what they heard from the public. This have a record in the earliest 18th century, and this period also marked as the beginning of private audit by lords of large manors, traders and other scribblers. Afterwards, in Italy also, there has been the references of auditing during 15th century, when a rapid growth of industry and commerce was emerged. The Italian mathematician firstly published the principle of double entry system to record not only the cash transactions but also non-cash transactions. So the work of auditor therefore increased considerably in this part, as not only the cash transactions have to be recorded or examined, but also non-cash transactions has to be examined. Then also historical evidences shows the reference of auditing in India as well during sultans and Mughals. They have their officers who were responsible of maintaining accounts and conducting audit of state finances. Now, this 18th century has witnessed a major revolution to audit process when industrial revolution in England was started. This industrial revolution led expansion in production in many industries of England, and for production there was need to be of huge capital, and which has emerged the need of some joint stock form of businesses. What is the feature or characteristics of this joint stock business? That is, it is characterized by separation of ownership and management. As we know, the company form of organization, there is a separation between ownership and management. That is, owners means shareholders, and management body like managers, board of directors, directors have separation between their rights and duties. Then this managerial body used to be conduct regular activities of the organization. So the shareholders funds are used to be managed by this board of directors. Because of this, the owners were not making day-to-day decisions of their business, as they don't have right to interfere into the daily affairs of board of directors. So they cannot see the regular activities conducted by this board of directors, and which leads to make assurance that managers were providing accurate accounts information to everyone. And this is the phase where mostly the revolution in auditing has emerged. Thereafter, the auditing professionals developed to meet this growing need in 1892. So in the 18th century itself, a professional body of auditing has developed. The first legislation was introduced in UK through Companies Act 1845 for audit purposes. In 1845, the UK they have fixed a proper legislation to conduct the audit. Then it required one or more than one stakeholder to examine balance sheet prepared by board of directors, because not only the board can check whatever has been included in the account statement or balance sheet, and not only the shareholders can check it, so it required one or more than one stakeholder. It can be anyone, any stakeholder. Then also in 1880, the Institute of Chartered Accountants of England and Wales were established, which has given a very fruitful contribution to develop legislations for auditing. So thereafter, the phase came of train the people to acquire necessary qualification and requisite skills to be an auditor, because before that there was not having any such necessary qualifications or any such training to those peoples who were conducting the audit. But in the 18th century, they felt the need of such proper training and proper prescribed qualification to work as an auditor. In India also, the first Companies Act of 1857 provides for voluntary annual audit of companies. In India also, we can say that audit practices were emerged in the period of 1857 itself. So in this way, we have seen the 18th century when auditing has came as a professional field. Now let us understand what happened in 19th century. The Companies Act 1913 made audit compulsory for every limited company. Thereafter, it introduced provisions relating to qualifications, rights, duties, and appointment of company auditor. So before this Companies Act, there was not having such kind of proper provisions regarding qualifications, rights, and duties to be appointed as a company auditor in India. But after the Companies Act 1913, there has been made a provision regarding with the qualification, rights, and duties. The Companies Act 1956 enhanced the scope of this audit work. So as we know, there has been a Companies Act 1956 which have emerged, and there has given a detailed description about the scope of auditors' work. Then Cost and Works Accountant Act in 1959 and Income Tax Act in 1961 has broadened the scope of auditors' work. They have also given the requisite criteria to work as an auditor. And in 1949, the Chartered Accountants of India Act was passed, which also has detailed description regarding the provisions of qualifications, rights, duties, appointments, liabilities, everything regarding the auditor. So after studying the history of auditing, we can say that there has been great revolution in auditing since from 11th century, 5th and 4th century up till 19th century. Now let us understand the broad meaning of this term auditing. What is mean by auditing first? It is nothing but the examination of cash transactions related to the revenues of state and its disbursement. It also has the meaning for which the auditor is required to give his opinion if the financial statements, reports, records and documents are true and if they give a fair view of the financial position and operating results of the business. So what mostly auditor has to do, he has to give his opinion on the financial statements like profit and loss account, balance sheet, cash flow, fund flow statements, etc. Reports, there can be committee reports, there can be directors reports, there can be process reports. On records, records includes every kind of records like invoices, any documents, any evidences, as well as documents. And all these records, whether they have been giving true and fair view of the financial position and operating results of any concern. It also has the term used for both financial and non-financial purpose audit. Financial audit can be conducted of financial accounts, financial books and financial statements, and non-financial audit can be conducted for other purposes like environment audit, energy audit, social audit, system audit, etc. I hope you have understood the meaning of auditing. It is nothing but the examination of and review of financial statements or transactions. What definition says about this auditing? Auditing is a systematic examination of books and records of business or other organization in order, this is important, in order to ascertain and verify and to report upon the facts regarding its financial operations and results thereof. Now see, in the definition, three important parts are there. The first part is, it is a systematic examination of books and records of the business. The second part is, it is conducted in order to ascertain and verify. Third part is, why it is conducted? Because you have to report upon it, report upon the facts regarding these financial operations. So you can learn the definition by segregating the definition into three parts. I hope you have understood this meaning and definition. From the earlier meaning and definition, we can say there are some features of auditing based on such definition and meaning. Which are those? First feature is, it is a systematic and independent examination. Why it is called as systematic and independent? Systematic in the sense, there is a required process to conduct the audit. There has been given some rules and regulations for conducting audit. Hence it is called as systematic. And why it is called as independent? Because the work of the auditor should be independent one. The process, the work, the duty auditor is performing should be free from any biased, free from any pressure, free from any influences. Hence it is called as independent examination. Second feature says that it is a review of financial and non-financial data. As we have already studied, there can be a review or examination of both the data, financial as well as non-financial. Third feature is, the object of auditing is to show true and fair view. So it is the duty of auditor to show only true and fair view of financial conditions of any organization. Whichever is the position, actual position, it should be noted by the auditor to their stakeholders. Next, to check the propositions correct or not. So whatever propositions, whatever statements has been given in the books of accounts or records are proper or not, or these are correct or not, is also one of the feature. Then for that purpose, the auditor has to collect the evidences. He can collect the evidences from factories, he can collect the evidences from head offices, any branch offices, from any employee, any director, any officer of the company, and he can collect all types of evidences for his successful audit work. Then the next is opinion regarding the situation. Opinion regarding situation, that means there can be any situation, that can be any review conducted by the auditor. He has to present such review or such opinion into his audit report and also notify this to the client. Okay, so I hope you have understood these features, which are those: systematic and independent examination, review of financial and non-financial data. Objective is to show true and fair view of financial statements. Then to check the propositions are correct or not. Propositions means if there has been recorded any asset, so that asset is actually exist or not. If any depreciation is charged, which it is correctly charged or not. If any internal check system is there for cash receipts and payment, it is proper working or not. Then next is auditor collects evidences from inside or outside the organization, like from factories, from banks, from customers, suppliers, from anyone. And last, he has to give opinion regarding the financial position of organization and also to report such opinion properly. Let us understand the objectives of auditing. The main objectives of auditing mainly bifurcated as primary and secondary objective. Which is the primary objective? Primary objective of auditing is to give an opinion as to the truth and fairness of financial affairs. As we have already discussed, it is a very most important objective of auditing is to give opinion on truth and fairness. What is secondary objective? The secondary, and which is also important one, that is detection and prevention of errors and frauds. If any kind of errors and any kind of frauds are occurring in the organization, and if the auditor has found out such kind of errors and frauds, it is his duty or his objective to detect such error and to take necessary measures to prevent such errors and frauds. Let us understand this in more detail. So this is what about primary objective, which is that to give an opinion on the financial statement of the enterprise, expressing whether the financial statements give a true and fair view of what? Of operating results and financial position of the company. What is secondary objective? It is to ensure there should be no misstatements are done in the books. And the incidental objective of that audit is to detection and prevention of errors and frauds. This is what about the details about primary objectives. Firstly, that is balance sheets and P&L drawn as per the Schedule 6 of Companies Act. So he has to check that whether or not the balance sheet has been drawn in a proper manner. Then information needed by users and financial statute has been provided. whatever information has been needed by the users. Users may be the investors, users may be other stakeholders, users may be bankers, income tax authorities, government, or any other financial body, and such information has been properly conveyed to them or not. Then disclosures in financial statement helps to draw correct conclusions. So whatever disclosures are making by the company into the financial statements are correct or not, and how they have been drawn in these statements. No overstatement and understatement of financial position. This is also important. That means nothing should be overstated and nothing should be understated in any financial document. And lastly, whether or not the financial statements are prepared as per the generally accepted accounting principles, which is shortly known as GAAP. Okay, so you should have understood these primary objectives in detail. So my dear students, I hope you have understood this basic concept of auditing right from its beginning, right from its origin up to the next centuries. In 19th century, thereafter we have seen the meaning, definition of auditing, objectives of auditing, etc. Please read it thoroughly and carefully. Thank you once again.